Homeowners across the entire country are sitting on a record amount of home equity. So let's talk about what these people are doing to put their equity to work besides just sitting on it. But before I dive into this, do me a huge favor, hit that like button. And if you're not already a subscriber to the channel, hit that subscribe button so you get more content like this. So let's talk about how homeowners are putting their equity to work in various ways. Right now, the most popular way, the thing that we're getting the most requests for, are debt consolidation refinances. Why? Well, for one, consumers have more consumer debt right now than ever before in recorded history. I did a video on that not too long ago. Consumer savings are also at record lows. They literally did an inversion. With homeowners sitting on a record amount of consumer debt and the Fed has raised rates that impacts those debts, they're feeling the pinch. Their monthly payments have skyrocketed. And even though they've got a sweet rate on their first mortgage, they can save literally hundreds, sometimes thousands of dollars per month by eliminating this high interest debt and replacing it with a new mortgage. But that's not the only reason that people are tapping into their equity. Other reasons include remodeling. I mean, I don't know if you've looked at how much it costs to put in a new kitchen or a pool or a roof or whatever, but homeowners, they're sitting in these houses a lot longer, especially those that are sitting on low interest rates. And so they're looking to improve their properties, whether it's required maintenance or they were stepping up their game in their house and they're improving their property. These things are much easier to pay for, much cheaper to pay for when you use a mortgage. If you do a personal loan for some of these things, the interest rate's ridiculous. You're going to be in that same boat as the people I was just talking about doing a debt consolidation refi. So you might as well start with a new mortgage, whether it's a first or a second mortgage, to pay for these things. So why else are people tapping into their equity? Again, people are looking at their equity as a way to pay for things that's cheaper than other avenues, okay, like a credit card or an unsecured loan. Well, you have life events, weddings, college, things like that come up that are very expensive. Consumers are taking advantage of their equity to pay for those things at lower borrowing costs. Now, one other way that we're seeing a lot of people tap into their equity is to pay for their next property. They're literally pulling their down payment out from the equity of their current property and using that as the down payment on their next deal. Some people are buying rental properties. Some people are upgrading, taking advantage of the buyer's market right now while there's still a lack of buyers out there compared to what there will be when rates come down. So between doing debt consolidations, home improvements, paying for large life event expenses, or expanding your real estate portfolio, tapping into your home equity can be a much cheaper way to pay for those things. If you want to get a quote on what a debt consolidation refi or a cash out refi or a line of credit, what something like that might look for you, go to newwayquote.com, fill out a little bit of information, and then we'll send you the info to help you in your decision-making process. If you got questions about this, do me a favor, put them in the comments below. Maybe I'll make a video about it. See you on the next one.